In the past, we've seen these 4-year cycles where Bitcoin goes through the bull bear markets, typically a 3-year bull, 1-year bear. Um, and they're wondering, with a lot of the institutional interest now, the ETF inflows, the growing adoption, the number of catalysts, but specifically institutionally, do you think that this is putting in a bit of a constant bid for Bitcoin? Obviously, nothing's guaranteed, but do you think that changes the landscape of how we view Bitcoin in these cycles in the near term?
So I think it could certainly smooth it to some extent. I'm not sure it would necessarily change the shape of that cycle. That cycle is not guaranteed to continue even without the ETFs, but should it be set to continue, I'm not sure the ETFs would change the shape of it, but they could certainly take the edge off. And for example, a lot of types of portfolios have kind of natural rebalancing built in. And so should Bitcoin get into some of those portfolios where they generally tend to kind of rebalance towards things that have underperformed lately or kind of trim things that have outperformed lately, then that could be somewhat of a dampening effect on the downside volatility. In addition, a lot of the ETF would generally be unlevered. So it'd be held in various accounts that are not using leverage. Whereas one of the accelerators to the downside during these types of bear markets tends to be the leverage liquidations. And so
Mm,
ideally, you want to have a smaller amount of leverage relative to Bitcoin's market cap, and that these types of accounts are less likely to have extreme leverage. So I don't really have a super high conviction on that, but it's a general trend that I think is likely to play out over time. Um, and so, um, and as far as kind of the cycle is concerned, I think that Bitcoin's still going to have periods of volatility ahead because most technologies, when they get adopted, they rarely get de-adopted. No one ever kind of gets electricity and then goes, they don't want electricity anymore. They get a car and they go back to not having a car. Most adoption tends to be, fairly one way or 95% one way. Whereas because Bitcoin is specifically a monetary technology and actually the unit of account itself, rather than just the transmission mechanism, um, adoption breeds leverage and euphoria. And that breeds people buying in at the top without fully understanding what they own. That breeds people building too much leverage on it. And when any sort of catalyst, anything that kind of pushes that to the downside, it means you go through some degree of leverage liquidations and people de-adopting the technology. They say, okay, I bought this, but I think it's a scam now. I made a mistake and they get out of it, which is not really the lesson they should get out of it. It's just that they bought the top. They maybe bought a bigger size than they should have relative to what they understand about the network. And so it has to kind of go through a multi-year period of rebuilding its credibility, rebuilding its kind of like shifting money from fast money hands to strong money hands and kind of set that new floor until it kind of goes back up towards adoption. And so I think that, we still have probably a handful of cycles ahead of us for volatility would be my best guess. But hopefully we'll start to see a dampening of volatility as a larger, more diverse and perhaps more mature types of entities hold Bitcoin.
Thank you, Lynn. There's a great segue here for Rickard, who is asking a similar question, but he specifically brought up the gold ETFs that were approved in 2004, and how roughly a month after they were approved, maybe a couple months, it was kind of choppy, but then they essentially went on a 9-year stair step trend up from there. I think within a 9-year period, they were up almost 300%. Obviously, Bitcoin has a little bit more volatility, so we would expect those to be baby numbers in a 9-year period for Bitcoin. However, do you think that that's an applicable comparison? The first gold ETFs and the Bitcoin ETF. It's a comparison that many make, and I just want to get your take on that.
So I certainly think it's worth that the fact that people have made that observation, I think is useful. I'd be a little bit cautious about spurious correlations and kind of low sample size because during that period, a lot of commodities did very well. In the 2000s decade. And in that environment, there was a very weak dollar period. So if you look back at the kind of the 50 plus years of the current monetary structure, there have been three major dollar index bull markets relative to other currencies and two major bear markets between them. And so the 2000s decade was a significant dollar bear market. And those tend to be decades where commodities do extraordinarily well. And so gold was doing very well, oil was doing very well, all of those were depressed assets in the late 90s, kind of going into that period. And that was kind of like a lot of things going up together. Gold was also rising generally before the ETF came out. And so, I don't necessarily place a lot of weight on that comparison, other than to point out that yes, any sort of new access point to large pools of capital should otherwise be pretty constructive for price. So I highly doubt that the introduction of the gold ETF hurt the gold price. It certainly could have added more to what that bull run would have otherwise been. But given what happened with multiple commodities and the dollar bear market, I do think we would have seen a significant gold bull market during that decade, regardless.
That's a great point. I know you've said in the past that maybe this was a year ago, you said that you believe we're coming up on a commodity cycle. I don't know if you still hold that belief, but yeah, great. Thank you. Maybe now's a good time to go
I want
back.
to ask one of the questions
Yeah.
I saw a few times in the chat to Lyn. There's a few people that are asking about holding Bitcoin versus rebalancing Bitcoin. And I think I can guess your answer, but how should people think about their Bitcoin allocation, to rebalance or not to rebalance?
I think it might depend on the size that we're talking about and what type of Bitcoin. So I'll say how I handled it last cycle. So last cycle I held cold storage Bitcoin, and then also in certain accounts I had things like GBTC, basically imperfect proxies, MSTR, MicroStrategy as well. I had these kind of custodial things in traditional accounts, and then especially for ones that are kind of out there in public for like my followers to see, I had to be careful about how large those got because when new money flows in, they could flow into a very large allocation towards the top. And so what I generally did was rebalance those in those kind of more tradable environments. So I would trim out of GBTC, I would trim out of MicroStrategy. I wouldn't sell the positions, but I would just, if you start with a 5% allocation and it goes up to 15% or more, I'm trimming back down to maybe sub 10% to kind of, take some of those gains and kind of take out the cost basis and smooth out the downside volatility. But that's different than what I did in any sort of kind of like personal cold storage Bitcoin. I wasn't like taking coins out of my hardware wallet and bringing them back to an exchange. If anything, I might have, I slowed down my purchases to some extent. I wasn't kind of like, smash buying like I do during like bear market liquidations. But I was still just kind of slowly DCAing in, keeping that cold storage kind of the way it is. And another way to think about it is that if you have physical gold in your house, if you have some gold coins tucked away or something like that, those aren't really assets you generally think about trading. You're not really checking the price of those. Whereas if you have a gold ETF in a portfolio and it was 5%, it goes up to 10% of the portfolio, you might trim that back down. So I kind of conceptually put Bitcoin in two different buckets for how I do it. Kind of like, am I holding it kind of indefinitely, or am I holding it as a portfolio slice?